This
Hey Frank, can you hear me?
conference will now be recorded.
Good morning, ladies and gentlemen. This is Clueless Trading Frank. It's 9:44 a.m. on Sunday, March 22nd, 2020. Welcome. This is a new member introductory training session, if we may call it that. It is going to be the format of this particular webinar is going to be open-ended. In other words, we are going to talk about some various things, and most importantly, I want to get some Q&A questions from you guys, so we can answer some of the things that you're encountering, and I will try to make it as simple as possible. This is not a specialized session on any one particular topic, as we do with our advanced coaching sessions for paid students. So keep that in mind. We are not going to be talking about one particular indicator or this and that. We're going to keep it more freewheeling and open-ended and answer direct trading questions, how to read the charts, things like that across the board. Full disclosure, this is purely for financial education, not for any solicitation or advice. So everyone, welcome again. So one of the things that, very importantly, this session will be recorded, uploaded to the Clueless Trading YouTube channel. So all of you, all others who cannot attend this morning, can listen to it at their own time. More importantly, the videos, the videos which are freely posted on the YouTube channel are accessible to anybody out there with the internet connection. So I'd like you all to spread the word. All you got to do is put your email in there. It's free. Subscribe. So anytime I'm putting something up there, and those are extremely resourceful. They are a great learning tool. They're a great forecasting tool, as you know, and to learn about technical analysis, all that stuff. You guys can all listen to it, and of course all your friends. More importantly, and this is what you're seeing behind you here, we have a specialized playlist within the YouTube channel, says new member, and that playlist says new member introductory videos. Now that's very critical for new members, because this session is really directed toward newer members who have come and joined Clueless Trading, and thank you all for that over the past couple of months, or recently in the past week or two. That's the resource you need to use. I have fantastic one-to-one interactions, group sessions that I put out there, explanatory videos on how to read charts, chart pattern analysis, how to trade options, all the way from the basics up, and all kinds of other educational resources which will help you in understanding the fundamentals, so that you can bring yourself up towards signing up for the advanced coaching sessions, which are far more specialized and more technical, and that's for people who want to take their trading to the next level. So please keep that in mind. The playlist is new member introductory videos. Just scan through a couple of them. You can go by chronological order, by date, and you can listen to the more recent ones. You can look at some old ones. You can always fast forward as you're listening to it. So extremely powerful resource. Many people ask me, where can I find my stuff? Where can I get up and going? I said, that's one resource. And the other resource, of course, is to just go on YouTube and under search, just type in, if you're completely new and you want to learn the ABCDs of options. Yes, I have some great videos on that, but keep in mind that I'm an advanced professional trader, so I do explain things, but you need to know the ABCDs, okay? The 1, 2, 3, 4. So you have to know the numerals, you have to know the alphabets, so that way you can read, all right? Just like in life. So in Google, just type in options trading for beginners, something like that. There are thousands of videos. Pick one with the highest hits. There are guys there with like 20 million hits or 3 million hits. God bless them. So those are great learning tools too. You can do the same thing with basic technical analysis, and 1, 2, 3 tells you. You can do basic options trading. 1, 2, 3, you can do that. Okay, so just keep that in mind. The other resource that I want to show you guys, which is absolutely fantastic, especially for new people looking to learn about trading, is Investopedia. Most people know about it. Some people don't know about it. Investopedia is the ultimate encyclopedia, okay, like Wikipedia, of anything to do with finance. You just go up there in the search box, type in anything. What's a megaphone pattern, that I show once in a while. Good, type in megaphone pattern right in here, and it's going to give you a bunch of articles. This is how it looks like. Okay, I'll just show you. And please bookmark this. memorize it. Investopedia, they have come a long way from many years ago when they started as a forum for explaining technical analysis and stuff like that to where they are today. So megaphone patterns, and it gives you all these different articles on megaphone. Okay, chartpattern.com. This is it. Okay, and so you can click that and you can move on. So Investopedia. So between Google, I like to keep things simple, guys. All right, we're not in the business of overcomplicating things. Yes, my charts can get a little bit complicated sometimes. I have no choice. In a algorithmic high frequency trading robotic black box supercomputers. Okay, that's what runs the market. The market's not run by humans. Yes, humans program those machines, but they're self-learning, artificial intelligence. So those things are just dominating the market. Okay, you don't get 900-point drops and 2,000-point rallies because me and you are putting all our money into the market, right? The fund managers even have complained a lot about automated trading. You guys have read that in many articles that I put out there on my Twitter feed, and these things are just super fast, and they don't, sometimes remember, humans, we have a discretion. Do we buy or sell? Those guys are trend traders. So if something's falling, boom, they'll be selling more. Something's rising, they'll be buying more. And those are shown on my charts where the buy sell levels come into play, and I try to keep a modicum of technical rationality. It's a big word, okay, so that we know what the ranges are, where we can fall to, and this and that. But it happens very, very quickly. So yeah. So and Thursday's drop was a clear example of that. So to keep it simple, between of course, Clueless Trading YouTube, the regular Google YouTube, and Investopedia, you guys are good to go. You don't need to read like 900 books. Hey, if you want to read books, that's fine. I don't read books anymore. I mean, I read so much, it's not even funny. Okay, I read in my sleep. So the thing is, but I don't read books. I don't sit there with a paperback. I have a lot of great books that I've read. They're all in my around my workspace. But people ask me, hey, what trading book should I read? I said, listen, to me, a picture is worth 1,000 words. And I think all of you would agree with me. And especially as technical analysts, technical traders, we want to visually, I believe the visual cognition of looking at something and in the form of pictures, in this particular case, charts, and not just charts equals money, putting a roadmap in any type of market, bull market, bear market, wherever we stand, is far more effective, in my opinion, than sitting there reading a book. And a lot of the books are old. In other words, they are dealing with a market of maybe 5 years ago, 10 years ago. And the basics remain the same, but you have to adapt. And like I keep on saying, adapt to the new normal. I think all of you would agree with me on that.
Correct.
Exactly. And the sooner you adapt, and I'm adapting every day. Look, this is unprecedented what's going on in the market. I've never seen it. Nobody's ever seen it. It didn't even happen in 1929. The speed of the drop, the velocity of the waterfall decline. So what do? You can't draw you can draw some comparables. 1929, we were down 30%. We were down 34% in like 3.5 weeks. Unheard of. So I'm adapting every day. So I highly suggest that all of you do the same thing in life. We have to adapt to the situation that's happening, keeping the basic principles, understanding the basic principles of technical analysis are the same. So saying all that, I have multiple new member introductory videos. The most recent one that I did, and courtesy of some of these people who are here, and thank you for giving me the permission to put it up there so that all of you can take advantage of it. So you should thank them, not just me, is this particular one, which says ACS Advanced Coaching Session on March 2nd. It shouldn't have 48 views. This should have 48,000 views, because this is such a simple yet so effective, covers options trading, covers the time frames of what we're looking at on particular trades. Some trades are a 15-minute time frame, meaning we're looking at 15-minute charts. We have done multiple trades intraday that have doubled. Regeneron was one which more than doubled in 20 minutes, okay, in this type of market. And that happens too. So that's a day trading scalp. And then you want to swing trade. You look at the 1 hour, the 4 hour, all kinds of stuff, the daily, and all that is explained very well. So please, especially for newer members, this coaching session number 1, trading options, I highly suggest that you guys look at it. I think these are some of our members here listening, very focused. I love that. So we won't name any names, but that's fantastic. So I go through a lot of things. I go through what options characteristics are, what we are looking at in the form of how we strategize, what we do with dollar cost averaging. If something's at 2, drops to 150, drops to 1, what we mean by these. And of course, I'll answer any of these questions as we move along today. What is scaling in? What is a rollover? As stocks are moving higher, that's on a call option. We sell the cheaper strike, take the profit, take part of the profit, move on to a higher strike, and such. These can be very basic to some people. They say, well, that's very normal. Well, it's normal, but most people don't utilize that strategy. They sit on the same option, and then when that goes up, they don't sell, and then it goes down, and they're just like, what the hell? Okay, so all that is explained quite well, and we talk about a lot of good stuff. So this particular video should be highlighted, and there are many others like this, but this is the most recent one, advanced coaching session number 1, trading options. So just, again, I cannot emphasize but how important this particular 1.5 hour session was as a building block for a lot of traders. Now, at this point, I am going to go ahead and take the first set of questions. So let's kick off one at a time, obviously. So I'm just going to go by alphabetical order, I guess. So Miss Al, Mr. Rivera, go ahead with your first question, if you'd like.
Hey Frank, good morning. How are you?
Yes, sir. I'm well, thank you.
Actually, I've not a real question. I mean, it's been a little bit crazy this week.
It's been not just this week. It's been crazy for a while. It was even crazy, believe it or not, when the markets were going up 200 points a day and people were sitting aside doing nothing. So, but now it's super crazy. Yes, I agree.
No, I had an opportunity to start trading last week, and I made a little bit of money.
Okay, you know? that. By the way, is commendable. That is commendable. You know, I came out green too. You know, I'm showing highlights of multiple trades which are moving against the market, and we'll talk about those stocks. You know, those, believe it or not, I hate using the word. I'm not an old-fashioned type of trader. Say, oh, is it safe to trade now? There's never it's safe to trade. Trading is risky business, so you just have to minimize and quantify the risk. And we have shown multiple stocks which have gone up way against the market when the markets are down. And that's I'm just doing my job. So go ahead with your question, sir.
No question here, Frank. No question here.
Oh, okay. So let's move on to Aldi. Aldi, go ahead with any quick question you have, sir.
Yes, I just have a quick question. Frank, tomorrow, I don't know, let me see if I can explain it good. They're going to use robots instead of humans, right? Like to make trading?
Let me stop. Oh, I see what you're saying. Robots are always there. Yes, the New York Stock Exchange floor there's not going to be no humans. So basically what's going to happen is they're known as market makers. Now, I don't want to get into the details of that. They're the ones who basically say, okay, orders coming in, let's try to match the orders. That's the old-fashioned, if you remember the movie Wall Street, you see everyone running around. My office was actually right next door when I was in Wall Street. And the thing is that, yes, so the market making function is going to be the humans are not going to be there. So it is already very electronic. There's only a few people on the New York Stock Exchange these days, by the way, just so you know. So it is going to be fully automated, yes.
So what would be the difference like right now for us,
Yeah, so that's a very good question.
What's the advantage?
Yeah, so that's a very good question. So I can only give a half intelligent answer. I believe that let's put it this way. There could be some price distortion, meaning like you notice how the options have wide spreads. I've explained this very clearly on my Twitter feed.
Yeah.
And I want to highlight one very, very critical point for newer members. Matt, are you connected? Can you hear us, sir?
Yeah, you betcha. I'm here, Frank.
Okay, fantastic. Matt is in distant lands. We have people from all over. We have people from Switzerland. We have Matt here, a Canadian oil beast sitting out there in the Middle East, right?
Yeah, mid-sandstorm today, as a matter of fact, so hopefully I don't lose you.
There's a sandstorm, you said?
Yeah, my service is a bit shit today, so hopefully I don't lose you.
Okay. We're gonna keep this. You know, we're in. Hopefully you don't. Okay. So very international crowd. I love it. You know, gives me a lot of energy. So one of the things for new members I want to highlight is that there's an abundance of direct, relevant information, real time. What is happening directly on my Twitter feed. So it is extremely critical that all of you, especially the newer members who are just getting used to the style of how I present, this is the only thing you got to focus on: the real-time Twitter feed. The website is just a landing site. You know, the chat rooms there, this and that. That's not important. In days past, the chat room used to be packed with people back and forth. Took a lot of my time responding to this question and stuff. You can still post a question on. I still monitor it, but nowadays it's empty, which is fine because people are focused all the energy on doing that. So the real-time Twitter feed is the source that you need to go to for trade alerts, for understanding what's happening with the market. So for all more recent and new members, this is it. This is the place that you need to get the notifications from. A lot of people might not realize that you can put your cell phone number under settings on your side, on your Twitter side, so you get an immediate notification whenever I'm putting stuff across, posting it. So it doesn't matter what mobile device you're in, you're getting immediate notification. So whether you're a swing trader or a day trader or a combination of both, which I am, then you are notified immediately. So this is it. So in answer, coming back to all these questions, which is a good one, I believe there is going to be price distortion. What is price distortion? And I talk about this quite a bit. It's called the bid-ask spread. So you're trying to buy something you're trying to buy an option, and we've been seeing this lately, and I've been complaining about it. What does my complaint mean? You know, a lot of people. So let's say you're buying a call option. 1 second. Make it a little bit livelier color. So let's say you want to buy a call option on Apple. So the call option, you know, you're looking at the bid is at let's say 2. You're going to see a spread of maybe $1, which is something that's been happening lately with everything. Option premiums are very expensive overall, and that's a function of the volatility in the market. And the ask is maybe at 3 or 4, not 4, but maybe 3. So there is a 50% spread. And I explained this in that training video that I asked you all to listen to. Very important. There's a 50% spread of $1 between where you want to buy and where you want to sell. So this type of stuff, Aldi, in my opinion, remember, the New York Stock Exchange is not an options exchange. You guys understand that, right? The options exchange, the biggest one, the granddaddy of all, is the Chicago Board of Options Exchange, CBOE. Then the Philadelphia Exchange, the PHLX. Then there's the West Coast Exchange, but these are the 2 biggest ones. So these are fully automated, and there are people still on the. They don't have people on the floor, right? So they're fully automated, and so there's going to be you're going to see price movements which are going to be not. It's going to be very fast, like we saw recently. But yes, it's all going to be electronic. So the options prices are not, in my opinion. First of all, we've been moving very quickly up and down, and maybe you see some price distortion, as in the bid-ask spread. Am I clear on that, everyone?
Yes, thank you, Frank.
Okay, next question for the next person. We have boss Ken. Go ahead, sir.
Yeah, right now I don't have no questions. I'm just,
Okay.
listening and
Okay.
absorbing all of this stuff.
No problem.
Maybe from
No problems. Greg.
I was just wondering about your charting. I've done a lot of reading on technical analysis recently, and they say stuff about like the sort of day chart you trade off of, and then like a parent chart. Just sort of what type of time frames do you
Okay.
look at and compare for those two?
So first thing I will ask you to do is to, of course, listen to that particular video that I highlighted. Okay, that's number one. The time frames all depend on what time frame you're looking at. So let's pull up a chart, for example, of the overall market. And the time frames depend on whether you are looking to swing trade something, in which particular case in these type of markets, can be a somewhat difficult because of the movements in the market. So if you're looking to, let's say, make a quick buck during the day, which can always be done, by the way, which can always be done because the markets during the day are either moving up or down. They never move one way down and they never move one way up. So you use for day trading purposes, ladies and gentlemen, 1 second, let me get the mouse right. You want to use the shorter time frames. And those shorter time frames, I'm not a 1 minute, I don't use 1 minute charts. Many day traders do, and that's fine. I use primarily the 15-minute and the 5-minute. And if I want to get a view of like, okay, if the market's turning, I use the 1 hour chart. So let's take a look at a stock like Netflix, which has been a big winner for us. And hopefully will be a big winner for us going forward because Netflix is a direct play, stay at home play for during these coronavirus times, right? So this is so if you want to see like, okay, where can Netflix go from this point? I can draw a quick technical pattern and say, hey, Netflix still looks good, and it does. It is this goes back to July of this year. Everyone stay with me here. I can go like this. This is called a back of the napkin calculation. And this is known as a cup and handle. A cup and handle normally under normal circumstances, without the situation we're going through now, with the shutdowns and everything and the economy coming to a halt short term, normally breaks out. That's a high probability breakout. So Netflix would very easily be above 400 if we did not have the coronavirus issue right now. This was a classic case of that, okay? Now, if you listen to a lot of the so-called gurus on the media and stuff like that, stocks finished, blah, blah, blah. We were buying Netflix at this level. We identified this pattern way before anyone. You can go listen to my videos. You can find my charts on the Twitter feed. We did it. Now, did I buy it here and say, okay, 4 months later, I'm going to be up here? No. I followed the general trend, and as a trader, I took profits along the way. So here we had this, then coronavirus came. So the stock basically collapsed. And now it's starting to move up. So when I'm looking at a chart like this, it's giving me a bigger picture of where Netflix might go. Netflix, in my opinion, will hit the 50-day moving average, the 34-day moving average. When you listen to my other videos, you know the colors. The orange one is always 34-day. I explain the basis behind these moving averages, the 50-day moving average. Netflix has the room to move up to with the 360, 370 level. Do I think it's going to go back to 400 and stuff? Hey, maybe it will, maybe it won't. I mean, given what's happening with the market, it might have a tough time doing that. Whichever the case, it is attempting to go back into this handle part of this large cup. So, saying all that, let's take a look at making money now. Because one of the things I'll tell you guys, the way the markets are, you need to, some of the trades, depending on your time, commitment, you want to take, you got some nice profits, 40, 50, 60, 80, 100 is fantastic. Double on that, take it. Don't sit around, take it. You can always come back to it, but take it. That's my opinion. Unless we get a systematic turn in the market, which could last anywhere from a couple of days maximum before it hits those levels where they sell again, don't sit around thinking, oh, it's all fine now. And there's too much going on. There's too much going on. I'm not just talking about coronavirus. I'm talking about technical stuff. I'm talking about credit markets. I'm talking about margin calls coming through on margin calls coming through from hedge funds. Like that happened, but one example that happened on Friday. So take your profits. So this is your sort of the bigger picture chart. Let's skip all the way to the 5-minute. So let's say you're sitting there on a Wednesday. Well, we were long Netflix pretty much all week since Tuesday, Monday. So how do you make money off this? So this is a unstructured chart, meaning I don't have the lines and stuff drawn on it. And anyone can do this. There are many ways to day trade. Some people look at level 2. That's the number of orders coming in and stuff. I'm not smart enough to do that. Well, I know level 2 very well. I just don't have the time and the patience to look at, like, there are 500 shares coming in there, this and that. I look at my charts. To me, it's work. I look at candles. It's another point I want to make to all of you guys. So listen very carefully. You have to know candlesticks. It is not hard. A green candle is great. A red candle is bad, depending on which directional bias you're going. Are you long? Are you short? So what are the different types of candlesticks? I have a very simple video, 10 minutes. I found on YouTube. I put it up there on the new member playlist months ago. But there are fantastic videos of traders and other people on YouTube explaining that. You have to get to know candlesticks. If you don't, it is the most critical factor. What are the different patterns of candlesticks? What is a bullish hammer reversal? What's an inverted hammer? I explained these on my training videos also. So certainly focus on those too. What's a bullish engulfing? What's a doji? And I try to, sort of, I mentioned those on my at times on many on my technical charts, but you have to know them like the back of your hand. If you don't, you're not going to understand these most of the charts. Yes, you can. Some people, look, let me finish. Some people just say, you know what, I don't want to know about all that stuff. I said, fine. In the normal circumstances, when things are not this crazy, you're going to make money. But with this type of volatility, you better know what I'm messaging across, because I cannot give a running tutorial in the middle of my trading day on my Twitter feed. That's obvious. For that, you go listen to my videos, sign up for the advanced coaching sessions. That's a separate issue. So bottom line is, get to know the candlesticks. So saying all that, let me just finish my thought on this thing. So Netflix starts off. This is Tuesday. Markets open up here. This is a monster. Monster meaning can be a monster down or a monster up. Netflix moves very fast. The options are not cheap right now, but they're not super expensive. You can buy $5 calls, which we have, and sold them at 7, 8, 9, 10, 15. Other day, I gave Netflix twice for you guys. Each day, they gapped open 15 points, 25 points, 25 points, literally. Okay? So you got to be in it to win it, either the day before or jump in, depending on what the situation is and what I put across on that. More you understand the charts, more control you can take over your own trading. You don't even need me to post something. You'll be like, okay, I see it, I'm getting in. So you can notice that these ranges on Netflix, 290, this is 9 o'clock, by 11 o'clock, by literally 10 o'clock, 25-minute trade, 315, 25 points. Your options, more than a double. And remember, we're buying the cheap ones, like $20, $30 out, or $10, $15 out. So you could get 100 to 150% fast. Now, what do you want to do after that? That's you. If you're a new member, you might say, hey, listen, this is great. You can take a little bit of that and play some other ones, but just giving you an example of a fast-moving day trading and swing trading stock. Same thing here. 300 by 11 o'clock, 325. That's 25 points. Now, somebody says, hey, a lot of trading services says that there are exact rules to this, that somebody, some new members, obviously simple questions like, hey, is this something that happens all the time? That's a wrong question. It's just a pattern, what was detected just in the past 8 days. Is Netflix a 20, 25 point type of mover, 15, 20 point mover, up and down? Yes. But the point is, there is no set rule that that's going to happen. Sometimes we have been long Netflix, it's all great, and some analyst comes out and says, Netflix sucks. Nobody wants to watch anything, Stock's down 15 points right off the bat in the morning. Okay, I look at my chart. Is it viable there? I'm down on my options, maybe 40%, 50%. I'm a high risk trader, okay, depending on certain stocks. So I don't freak out. So I said, okay, take a look at it. People who sold there, they sell me the calls cheap. Boom. Next thing you know, the stock jumps up. And the same thing happened with, look, Netflix, this was Monday. Stock jumped up, like I said, 290, 25 points. So as it's moving along fast and furious, you want to take some profits. Then the stock goes to 320. What happens by the end of the day? I mean, the next morning, the stock opens down 15 points. 15 points for no reason other than the market's opening lower. So I took most of the profits here. I left a little bit out here, bought maybe towards the latter part of the afternoon because it looked good. It looked good. This is actually a bull flag. Bull flag looks like this. A bull flag can look like this. This side, these things I explain extremely well on all my trading videos. A bull flag can look like this. A bull flag consolidation channel can look like this. All of them have the general high probability move under normal market circumstances to break higher. Okay, so look really good. Boom, 15 points down. So I will, if I have the calls here at 5 and it's now at 3, or let's say 2, let's say extreme case scenario. I don't panic. I'm looking at the action in the first 15 minutes. This is pre-market. By the time the market opens, the stock is here. It's already moving pre-market, like $6, $7, $8. And you will notice that each individual stock has its own characteristic. How fast they'll move, what's the implied volatility, blah, blah, blah. Some are boring stocks, they move slowly. Some are fast-moving stocks like the Teslas and the Netflixes, even the Apples at times, which will move in a different way. Same thing with NVIDIA, same thing with AMD, Advanced Micro Devices. So you'll get to know that. That's something you learn in time, to get to know the characteristics of these individual stocks. So it opens up here. So I can't buy the options pre-market. So let's say the options here are $2. So I'll add more. As it zings higher, I'll be selling along the way. I'll be selling along the way. Then what does it do? Middle of the day, it crashes because the market just, remember, markets are run by exchange traded funds. I'll explain all that tonight. Machines, and they're baskets, billions of dollars worth of exchange traded funds that are sold at a certain time or bought at a certain time. And those own all these different stocks. So when they're selling, it's not the individual stock's fault. They're just getting sold within the basket. Do you guys understand that concept? It's ETFs, exchange traded funds, what they call
Yes.
passive investing. Okay, active investing, you hear two terms a lot. One is called active investing. What is passive investing? Active investing means picking active individual stocks based on their potential to make money. Passive investing is buy the whole frigging basket, like the SPY is the 500 top companies in the US, right? The spiders, the S&P 500. So the SPY is the ETF. So if they're selling the SPY, everything in there gets sold too, right? That's just the way it works. So so that's the answer to your question, Greg. That depending on your time frame, depending on your thing, this is for the short term day trading situation. It also gives, so there's a lot more noise. Each candle is 15 minutes, so there's a lot more noise. You can see how fast it's moving.
Yeah.
This was Netflix at 2 o'clock. This was when that big sell program came in, when they liquidated Ronin Capital's portfolios.
Wow.
And that's the reason why the markets fell 900 points. Now, do you hear that on TV? Do you hear that from other people? No. But you hear it here at Clueless Trading, because that is just one of the top value-added services that I'll offer. I'll make you guys more intelligent about the reality of the market than any other service out there. No bullshit, no garbage, straightforward talk. Okay? I found this. I said, that's it. I knew that. Something blew up. There's no way we drop 900 points without some hedge fund blowing up or some institutional outfit blew up. And that's exactly what happened. And maybe they'll talk about it. A lot of the things I'll talk about, you'll hear it on the media the next day. Believe me, it's happened way too often. Okay, let's stick to this great question that Greg brought up. So the next move is, let me just clean this, erase all drawings. So this is the 5-minute chart. I generally use the 15-minute. It gives me a little less noise. And I explained this very well in that new member video about noise. What is noise? Not your fans going on, not my dogs barking, not your girlfriend or boyfriend screaming at you. Noise is noise in the market, volatility, lots of noise. So the 15-minute chart smooths out because each candle is 15 minutes. How many 5-minute candles are there, Greg, in a 15-minute candle?
3.
Thank you very much. Such a simple concept, but people tend to forget that.
Mhm.
So you can see it's more smooth. So you don't, the more the noise, the more the human brain gets jumpy, right? Like we call monkeys on a hot tin roof, MOHTR. So we're all monkeys on a hot tin roof, but some monkeys won't fall off the roof, some will. That's just the way it goes, all right? That's trading. So less emotional, more tactical. So this is when it's smoothing out a little bit. So you're like, okay, I see it going, I see it going. And again, this is an unstructured chart. All the other charts that I show, I never show on a chart like this. You guys know that. I will draw lines over it. I'll show you the levels of engagement where you need to buy and sell, give or take. So you guys do realize that, correct? My charts are not just a random chart that I'm just throwing out there. You can look at this chart, but it's not really telling you a hell of a lot. You got to draw the structured lines on it in order to create the roadmap. Are you guys all with me, especially the new members? Matt,
Yeah, I'm with you.
good. Feel free to interrupt me because this is for your benefit, ladies and gentlemen. So you can just draw simple lines between where what we call the demand zones, where they buy, where the machines are buying, and the supply zones where they're selling. And in between, there are multiple patterns. This is known as a inverse head and shoulder. This can be also a W pattern, both bullish. This is a head and shoulder, which is a negative pattern. So will Netflix crash all the way down to 310 if the market's open lower tomorrow, 350? Absolutely, it will, just because of the market function. Will I be looking for a scale in and buying at that point? Because I've called on Netflix. Yes, I will be, depending on the market. Now, regarding the correlation with the stochastics and all that stuff, I'm not getting into it right now. I have that on my training videos, and those are I look at the internals, I look at the externals. What's an external? External is a chart, and the internal are the indicators. The simplest indicator to use for all new members, especially listen, is the stochastics. Gives you overbought, oversold conditions. 70 to 80% of the time, it's a win. If this is starting to turn up, that means it's coming off the oversold conditions. And if the minor bounce on Netflix, the stock's going to get 8 points right there off the 15-minute chart. Will you get all of those 8 points? No, it's very fast. As long as you get the meat in the middle, that's fine. So saying all that, you guys can see now it's smoothing out. Now, if you go too far, zoom out too far. 1 second, sir. Erase all drawings, get the pen. If you zoom out, sorry about this, I have to switch between cursors all the time. So this is your 15-minute chart, great trading tool. I show you the structure charts with the levels and all that. You can trade all day long off that. Is it easy? It can be easy. Is it hard in these markets to react to the speed? That's the hard part, just so you know. So if you look at a 1 hour at this point, you can go 30 minutes. I don't use 30 minutes. 1 hour, then you can see you're seeing the bigger picture. The 393, the zigzags, all this stuff. Netflix got very oversold at the end of the day when the 2 p.m. sell program started to come in right there. And from 344 to 331, somebody says, oh my God, it dropped 12 points. Now, that's a normal reaction of a human trader. From a technical standpoint, I'm like, okay, this was a systematic sell program that came in. If the market stabilizes after opening lower tomorrow, which I think it's going to do, I'm not quite sure. A lot of the retesting back and forth is done before the market opens in the Globex futures market, as you guys all know. Then I am looking at a pretty decent, let's do cup handle. That's called a neckline. Imagine a cup there, breaks out, creates a handle, and generally has the characteristics of a cup and handle. It will break out. So will it come and retest? There's another neckline here, 320. So is it possible the stock opens down 11? Very possible. I'm ready for it. At this point, it becomes a little bit tricky because at this point, I don't know if it's going to come down to 290. If Netflix goes to 290, 300 on its big smash down tomorrow morning, I personally am buying the crap out of it because I know there's going to be a sharp bounce. We are playing ranges here. We're not sitting there saying, oh, Netflix is a $500 stock. Yeah, it probably will be, down the road when things stabilize. But here, you have to play that. So those are the time frames that we look at, Greg, from a standpoint of making some money during the day or overnight.
That is awesome. That just cleared up a lot, actually. Thank you.
No problem. Anytime. Next question from anyone.
I'll go again. I have a couple more. If I don't know if anyone else has any first.
No, go ahead, Matt.
So this just popped in my head. This doesn't have to be that big of a question, but as you were talking about, following the candles and seeing the trend and understanding them, I've also seen a lot of stuff with these Heikinashi candles. I don't know.
Yeah, I let me stop you. I told you I wasn't that smart. That's why I call myself Clueless A Trading. You can use Heikinashi, you can use Ichimoku. Believe me, I know that stuff. Okay, you can use point and figure. I just I don't use them, and so I can't. Yeah, but you can certainly do it. The Heikinashi and this, and to me, listen, that's why a lot of people like me. I'm like really simple when it comes to it. And a lot of crap about the market, all this stuff. Some people say you're really smart. I'm like, yeah, thank God. Yeah, right. I'm smart. Yeah. But yes, I'm just a very fast learner. All right. Yeah. When it comes to the market, I'm very smart. I can give you ins and outs of the market, and I've gone through many different periods of the market since 1996 when I first started on Wall Street. So it's been quite a few years. So, understand that part. There's a lot of technical indicators out there. There are guys that show the charts I don't even understand. And so the reason I just say simple candlesticks is because candlesticks give me a lot of information, just the simple ones. But in answer to your question, sir, absolutely you can utilize those things. Next question. Go ahead.
So how do you exactly, something I've struggled with personally when trading. How are you choosing the strike price and expiration date for certain options picks when you see a play happening? How do you know to pick 2 weeks out or 3 weeks out or maybe end of the week? That's what confuses me sort of.
So very good question. Did everyone hear that question?
Yes.
Everyone heard the question? Okay. That's a damn good question, Matt. And Matt, by the way, change when you guys come into the web room and stuff, you don't want your full name displayed, just always change it to, some sort of funky boss, type of handle, so that, it's easier. But it's good though. No, actually that's fine because at least I see people's names. I know who I'm talking to. So depending on a particular type of stock is the type of strikes and expiration I'm looking for. If I'm looking for one of our biggest winners, and will be tomorrow too, in my opinion. High probability. Aldi, tell me what it is.
Regeneron?
That's one. What's the other one similar to that? I mean, not similar, on a different sector, but a coronavirus play that we have been consistently making money on.
Zoom.
Huh?
Zoom. ZM.
Zoom. Zoom. Zoom.
Yes.
And most of the traders knew, but most people out there, they have no idea about Zoom. They're like, what? All of a sudden, Zoom is like the frigging. Of course it is. Look at their business. It's going nuts. Now they're shut down. I just read an article on CNBC. Zoom is they're like going nuts. There's other companies that offer this type of stuff. This GoToMeeting, for example. This company, Log Me In. I believe they got bought out. We were in it. It was a really crappy buyout. We didn't make much money. No, Log Me In is still on. I'm such an idiot. LOGM. We'll take a look at that. Good that I remembered. This GoToMeeting that I pay for, and I've been with them for a while, Citrix Online, used to be called GoToMeeting, is owned by a company called Log Me In. So this is also a video conferencing thing. So bottom line is that if you're looking at these fast-moving stocks, then you're looking, I'm going week by week. I'm not going out 2 weeks. Now, a lot of people have different strategies. I'm going week by week because that's where most of the cataclysmic events, up and down, are happening within hours, if not days. Yes or no?
Yes.
Yep.
Okay. So, saying all that, why am I going to pay up? Well, the thing is, I do have April 17 calls too. So it's not like I'm just doing it week by week. But generally speaking, number one, the weekly calls, if offered, a lot of stocks don't offer weekly calls, right? Only monthly expiration. So April 17th is the next monthly expiration. Ladies and gentlemen, don't offer weekly calls. So I'll buy the monthly on that particular case. If it's a fast moving stock like this long-term chart that I showed you guys before, it's just so powerful, so powerful. It's not even funny. What's going to happen? All of a sudden, well, we certainly want all of a sudden coronavirus not to necessarily disappear, but slow down. What's going to happen? Everyone's just going to turn off their subscriptions, corporate subscriptions to Zoom? No, this is becoming a fact of life. Will the stock take a quick short-term pullback? Just say some good news on coronavirus comes? Absolutely. So on these type of heavy-duty stocks, which are fast-moving, I will look at weekly, and if they don't have weekly, I'll buy the monthly calls. Now, the second question, Matt, a very good question too, was what strikes do I look at? The strikes that I look at, generally speaking, have to do with my particular charts, and more importantly, has to do with how much I want to spend money buying those calls. Because option premiums are very inflated right now, expensive, just like price gouging. They're selling face masks they were selling Purell for $80 a pop on Amazon until they shut it down, right? So option premiums are indicating massive fear, or greed, in which case all things are so cheap, so everything is inflated. So the second thing that goes through my head is how much do I want to pay for it? So generally speaking, on a stock like this, which has a trading range of anywhere from $10 to $15 a day, I will buy options which are $10 to $15 out on the long side. And it's really as simple as that. In the case of Netflix, I buy options. You look, this is how you do it. Okay, hold on for 1 second. Sorry, you there?
Yes.
So the best way, if you want to figure it out on your own, and eventually I want everyone to be independent of just waiting on my call on what I'm doing. I want people to sort of use their own thing. A lot of our traders do, their own gut feeling. Is you look at this is the simplest way I can explain it. Let's look at a 5 minute. Let's look at 1 hour. Okay, 1 hour is good. This is Netflix. You with me, Matt?
I'm here. I'm with you. I'm
Okay.
Greg.
Okay.
As
It,
I asked.
no, just explaining. That's it. Believe me, because
Yeah.
your profession, what you do, is far more specialized than what us professional traders, idiots, do. Trust me on that. I'll tell you that. So put in a little bit, point it in the right direction, Matt. You're gonna blow the scale when it comes to being a great trader, because you are far more specialized in your profession, what you do, than what we do. So just explaining that to you. So basically, if you're looking to, let's say, hold it for a couple of days, or if you look at what the ranges are. The ranges, as I explained, is roughly about 20 points, 20 to about 20 points on Netflix. So you want to buy the calls which are either $10 out of the money, $10 out of the money, or what we call OTM. Because if you want to buy exactly at the price the stock is trading at, you got to pay an arm and a leg for those premiums. So you want to buy $10 out of the money. I look at the trading ranges, or you might want to buy, in the case of Netflix, for example, which has been fantastic trade, I have been buying $20 out of the money. You guys know that, right?
Mhm.
Now, why am I buying? Somebody said, why am I buying $20 out of the money? Because the market is so volatile. So I'm taking into account the volatility in the market. And in this particular case, if the stock's at 340, I'm saying to myself, okay, I'll buy a couple at 360. And guess what? Depending on that option Greeks or option characteristic, the implied volatility, the gamma, the delta, these are things like what is the elasticity? Here's the simplest way I can explain it to people who are completely new. Every stock, let's say is a stock XYZ, has a certain correlation with their options. What's known as implied volatility, gamma, theta is the time decay. All that is explained in my videos, okay? How many days you have left to expiration. But they have a certain, like, I call it elasticity. Elasticity to the stock price. Can anyone guess what that means? It's like a rubber band. So what does elasticity of the stock price to the options movement mean? In simple English.
How much the price changes?
Yes, exactly. How much will the price change on the options versus the price change on the individual stock? Is everyone with me on this? This is the simplest concept you have to understand. There are certain stocks that we own on the biotech side which don't even move if the stock is up $2, $3, $4, and it's up maybe 15%. Moderna, which is one of the best companies we have made money on, it takes like frigging stock to go up 20% for the options to go up 60%. Like, what the hell, man? You should be up like 300%. But that's the options characteristic of that particular type of stock. Then you look at Regeneron. We buy it like $40 out of the money, and the stock doubles just because the stock jumps up 5%. Then you buy Tesla. We bought the Tesla 600 calls at $2.45. I bought $200 out of the money. Do I think it's going to go up $200? No. Stock moved up 50 points. We doubled our money. From 270, it went to 6 on Friday. See? So each of them have their own thing. Elasticity simply means how fast the options will move up or down versus the movement on the price. So that's how I determine what type of strike price I want to buy, depending on the characteristic of that particular type of stock.
That was Greeks or volume that affects that elasticity?
Correct. The Greeks are the options characteristics, and the Greeks are the gamma, the theta, the delta, the implied volatility.
Mm-hmm.
Exactly. Now, I'm not an options Greek. I'm an options geek. Okay. No, I'm serious. Now, the reason I say that, like, I'm not going to sit there and calculate what's the implied volatility, what's the delta, this and that, because this market have taken all those and thrown it out the window. I'm simply looking at, based on my experience, based on my charts, primarily how far and how quickly the stock can move. But yes, you're completely correct. Options characteristics, and there are guys who make a living of analyzing those hardcore numbers. And you see that on Thinkorswim. They actually show you the implied volatility, the possibility whether it's going to move 500%. Half the time it doesn't work like that. But hey, it's there. Those are for derivatives traders, who are into that. So my suggestion to all my Clueless 8 members, and of course you guys do what you need to do, is to keep it simple. The more complicated you get, it's called analysis paralysis. Okay, you're sitting there analyzing too much, and you're missing the trade. Now, that doesn't mean you jump into like anything just like blindly, but too much analysis does nothing. And there's a reason Wall Street analysts most of the time are dead wrong. Most of the guys to the other side are dead wrong because they're analyzing too much. Like, stop analyzing. Get into the game. When the battle is raging, you're not sitting there with all your plans and strategies and your war plans and your reconnaissance pictures and stuff and doing nothing. You get into the battle with the knowledge, like, okay, you know the terrain, and the terrain is basically the charts. And what was your next question? And great questions, by the way, from all of you guys.
That was it for me. You just helped me out so much.
Okay. Anyone else, please step in.
Frank, this is how they have a quick question.
Of course.
On this particular stock, Netflix,
Yeah.
Right now we have the March 27, 360 and 370 calls, right?
Yes. Yes.
As
Did
for
you do one? Let me ask you a question. The 360 calls have worked out about 2 times this week, 2 or 3 times. Did you take some profits earlier?
oh no, actually I got the 370.
I have more of the 370s. So I'm with you, brother. Okay, because the 370s are a lot cheaper than the 360s.
Yeah, correct,
You know,
exactly.
if I'm gonna buy 10 calls on my first batch, that's 6 grand, and then the market craps, all of a sudden my 6 grand's at 3. I'm not feeling too good. But if I'm buying 10 calls at $3.50, and that's down to $1,700, the first batch to go in, then I'm not gonna be feeling that bad. So yes, 370 call, and it can go to 370. Believe me. If this becomes like a Zoom kind of stay-at-home play, which it actually is, but they need more subscribers, then I can assure you the stock will jump 30 bucks real fast. So go ahead.
It was doing good until the 2 o'clock, and then we had the big drop because it was doing really good.
Like I said, one of the things all of you guys have to mentally train, what we call mental calibration, is never to say, oh my God, I can't believe this. Believe it. This is the type of market we live in. And this is the type of market, hopefully a little less volatility, we're going to live with. I've been talking about machines, algorithmic high frequency trading, black boxes running the markets for years now. And now all of a sudden they talk about it in the media all the time. Like, oh, it's the machines which did that. Yes, absolutely. When the market sells off 900 points, everything will get hit. I was up big time on Zoom on my second trade. That stock was still flat, still green, but profits got compressed. Teladoc, another huge monster that's going to go to 200 plus bucks very soon, in my opinion. Telemedicine, same thing. I was up a lot, and then I came down to almost flat. When you get a systematic sell program worth billions of dollars, everything's going to come down. So that's just a given. Go ahead.
So my
Go
question is, tomorrow when the market opens, when should we worry about the stock if it goes below the 3100?
Oh, what 31? You mean Netflix? You mean 310, not
Net
3100?
Yeah, 310. Yeah, 310.
From a technical standpoint, why is my Netflix chart here? Let me just show you very quickly. I thought this was constructed because I've shown the chart before. So basically, I would generally, how do I explain this? Even if the stock drops $20 tomorrow, right here, like I explained, all right? I personally am going to be a buyer right here. It can very easily do that because this was the last level on Thursday morning when we were in the stock from the previous day, and also I alerted right after the market opened, is where the journey began, right? So
yeah.
from a technical standpoint, remember, the only thing I can do is share my way of looking at it, and all of you have your own risk measures, whatever. Even if it drops down 20 points, which it can, I will be a buyer here. Where would I really not like, and they're like, okay, Netflix is like not going to ramp up at all, is basically the 300 to the 290 level. That's my level of support. I've mentioned that the 290 level is critical support, and so I would basically, in answer to your question, I would let go and take my losses somewhere if it goes to 300. Now, no, if it breaks below 300. Now, let me explain to you the reality of what happens. And all of you guys can relate to it. All. At the point of maximum inflection, where the stock basically hits major support, and it looks like all hell is losing, is exactly where the stock bounces from. And that is exactly where 90% of human traders sell. Yes or no?
Yeah.
Yes or no? Exactly. That is the most common thing. The machines know where exactly people's stop limits are. That's why stop losses, I keep it mental. I do not want to show, once you put a stop loss in, let's say you put a 50% stop loss in, right? You bought an option at 4 and you put a stop loss in at 2, you're like, okay, that's the most that I will go down. Okay? Once you put it up there in the system, the matrix, it's in the matrix. So all these fast moving algo programs are looking at clusters of where people are going to panic. Okay? So guess what they do? They push that
That's
stock down
cheating.
that side. Of course it's cheating. It's bottom line illegal. I've talked about this a lot. But you know what? They have the technological advantage. They can ban these. There'll be a lot of talk about stopping algorithmic trading. It's cheating, but algorithmic trading also, these machines also benefit us because they create volatility, which makes us money. Yeah, it is borderline illegal if you ask me. So what they do is they push the stock down exactly to that point. And which reminds me to write this down somewhere, all of you guys. You want a fair game in the world of trading or investing? It's never fair. The reason we win most of the time is because we can see what they're going to do and we don't do what they want us to do. And 90% of traders do exactly what they want you to do, which is sell here, they'll push it down, take your stop loss away, boom. Repeatedly. That's what it does. Now, does that mean you can never put a stop loss? Absolutely not. But you need to know that if there is, and that's the reason why we're so technically orientated. When I'm trading, I literally I sit straight and I just like my head just moves like one thing to another, looking at my 14 screens. I'm like a frigging robot. All I do is breathe. I'm very good at breathing. You guys should practice that. It helps. Okay? That's serious. I don't panic because I know they want us to panic exactly at the levels where they're going to, whether it's short term, mostly short term, bounce it. So in answer to your question, if you're a long-term holder of Netflix, then obviously you're looking at the 380 level like, oh my God, the stock's gone. But every chart that I look at Netflix, and a good stock that you brought our attention to, that you asked the question on, is telling me, 1 second. So that's the problem. Nothing we can do because it's not fair. Life is not fair. Trading's not fair. The machines are certainly not fair. They're not here to give you money. They're here to take your money away. Except we win most of the time to beat that at their own game. If I'm looking at the daily chart of Netflix, I would say that if that stock broke 290, this major support, then the stock is going to go to 250. But aside from that, these are just candles back and forth. For people, let's say a month, they bought Netflix April calls. For shorter term traders, we know what these levels are. So that's my answer to your question. There is no, I wish I could give you an easier answer. Like, oh, you sell here, it's all good. And you buy there, it's all good. No. Right when you
It's
sell?
good enough for me, Frank. Thank you.
Yeah, no problem. Next question, please. We're going to wrap it up at 11 a.m.
So, if I may ask, so there is not a, you talked a lot about hold and sold or something. When could you just give a couple words of when you just fold on a trade? When
Okay,
it falls breakout or something.
first of all, I never use the word fold.
Okay, not hold and fold. Okay.
Yeah, no, but that's a good point. I don't use the word fold. Okay.
Yeah.
I use the word sometimes. I sold these calls and I'm holding the other ones. So it's simple English. That means I'm holding the other ones. So, so what was your question? Go ahead.
So when you just when you just leave a trade with a loss and you say, okay, that was it. Is there like a general rule or something?
Yes, here's the general rule. That's a very good question. The general rule is my charts are telling us that the stock cannot bounce back. I will sell and take my loss. And I will shift positions, which I do, on a bunch of things which are not cooperating, not on one day, but the charts are not cooperating at all. So on those ones, I will sell and I say, I'll see you later. But aside from that, I will rely on my charts to determine whether or not I am going to stick to that trade. But that's a very, or I'm going to completely be out of it. Now, here is the difficulty. Trade management is tough. It's the hardest part of what we do. Like, which stock do you want to take money out so you can use that on another one, which is going to make you 3 times back more? Now, I do this a lot. Okay. Now, people, none of us have unlimited capital, right? So, but people with smaller amount of capital, they have to figure out that if they're in a swing trade on a biotech that is not going to work out for the next 3 months, why not take that money and trade it in one of the other movers? And we have shown lots of great movers on the coronavirus side, some of the virus stocks, as well as on this side, whether it's CrowdStrike, big winner on Friday, whether it's Zoom, whether it's Documentum, whether it's Teledoc, which you could have made 4 times back. So sitting on a swing trade, which is not delivering the goods, you need to, one of the key cardinal rules of trading is you bite that loss and you make it 3 times back up. Now, some people can do it very easily because it becomes a discipline. Not a rule, but something that they can do it flexibly. Some people are like, oh my God, I can imagine taking that loss. It's going to kill me. Well, what's going to kill you is the money you didn't make on the other side on multiple other trades that you could have gone and made money on. Because net, it's not about the individual stock. It's about what your P&L will look like at the end of the week. Yes or no?
Yes.
Exactly. So this is a mental part which is the hardest to fight. Not for me. So that's why I always say, do not personalize your losses, because this, the more you personalize your losses and you're like, oh, I'm just going to sit there because this thing, it's going to work out. Of course, it might work out 3 months from now. But what about all the great stocks that's working 3 hours from now and 3 days from now, which could have made your account a lot bigger? That is the biggest fundamental mistakes, one of the biggest ones that all traders make, old and new. Now, for that, to make that determination, you have to be more engaged with the market. You have to you have to be a tactical trader, because emotions don't come into the game. So that's what we do. Any other questions? Please feel free to shoot out questions. These are amazing questions that's going to help everybody else who's going to listen to this video. It's not necessarily my answers. Yeah, go ahead.
Frank, this is Al.
Yes,
I was
Al.
playing around looking at a couple of different stocks. RCL, which is Royal Caribbean.
Yes, I know. They're going to get a bailout and the stock rallies here and there. I personally don't give a crap about the cruise industry. The reason being, the cruise industry for years, in my opinion, will never come back to its fruition. Now, that's the bigger picture. So the shorter term picture, has the stock rallied like, has the stock rallied like 20% in one day because Trump mentioned he's going to save the cruise industry? Yes, right?
No. Okay.
So you can certainly trade that stock. I'm not going to touch it. I'm not going to touch it because there's so many other plays. I mean, the cruise industry, again, I'm not going to be a fundamental analyst and give you the numbers and this and that. Just think about it, common sense. Would you mind sitting at home watching Netflix or going on a cruise right now?
No, of course, Netflix.
So in answer to your question, can the stock be a trading stock? Yes, I agree with you.
Yes,
point here, the point there. I personally have never traded the RCLs and the CCLs and stuff like that, Carnival Cruises. So I don't know how the options move. I have monitored it on my screen. Like Uber was up like frigging 40%. I totally missed that trade because Uber's CEO came and said they have enough cash in hand and blah blah blah. So so yes. So what was the other stock that you wanted to look at?
No, that was the only one I was looking at. I saw it was like at 100 and I took a look at the 5-year and I just saw how it how it went down. I said, you know what, maybe buy a couple of common stocks and just sit on it a little bit.
Yes, and that is smart. You can, because at one point or another, the cruise industry will never come back to its normality. I don't think so. I think this is a fundamental change in our society. It's not that no one's going to go on a cruise. Come on. Of course they will. Yeah, you are certainly absolutely right. The stock will technically bounce. The stock can bounce all the way to 50.
Yeah.
I doubt that, but who knows? Uber, for example. Look at that. This is a far better looking chart than RCL. People will always take Uber. Now, Uber might give out free masks every time you get into an Uber, but that's serious. But the fact is, they might have screens, so you can't. So there's no exchange between the driver and the passenger. Trust me. And the CEO of Uber, he's a freaking genius. So the point is, The point is that this is the kind of stock I would look for a substantial bounce, and it has substantially bounced it, which I missed because I wasn't watching it. From 14 to 24, holy cow, 80%, 2 days. So technically speaking, this stock, in my opinion, can come back towards the 26 level. And these are cheap options. This one I'm going to highlight more. So Uber, in my opinion, is a better play than RCL.
Thanks, Frank.
No problem. Next one. Next question, please. We got 6
What's
minutes.
the deal with Anthem? I didn't understand with Anthem Athletics.
Yes, Anthem's here's a simple answer. Anthem is the best company ever. Anthem Health, Anthem, United Health, and Humana. We have made consistent money on it. We're getting slapped on it right now, even though I keep on buying cheap calls.
Okay.
Okay,
Thanks.
here's the reason. No, that's not the answer. Wait for the answer, Patrick. Patience.
Okay. Yeah.
Okay, yeah. The answer is, somebody says, why the hell are these health insurers falling? That's because of the systematic selling, which is just pushing these things down. These are big companies, multi-billion-dollar companies. So the only reason, and I'm so excited about Anthem. Okay, I'm very emotional about Anthem. I'm just kidding. I keep on buying the cheap calls, and you know I'm buying the cheap calls. I'm buying the calls at 260. That's $70 higher from here. So somebody says this guy's crazy. I answer, yeah, he's crazy, but he makes a lot of money trading. So don't have to follow me, but I believe, I'm looking at the weekly chart here. This was Anthem's. Let me look at the monthly chart. Beautiful. So here's Anthem Health, a company that went from 2012 from $40 to 320. One of the biggest winners ever. The stock here, we played a lot of this move back on the upside. Then it broke. The stock was down 45 points. Like, what? Okay, nothing to. Right now, it's engaging the Fibonacci 50% at 185.92. Guess where it hit? This is not magic. This is called technical perfection. Where did it hit? 50 fib. Remember, on a long term and mostly long term, you generally tend to retrace back, regardless of market circumstances. 50% of your value. The stock went from $40 to 320 in 8 years. Now it's coming back and retesting the 50 fib, which I technically give a lot of credence to, right here. Guess what it did? It hit exactly that on Friday. Now, can it slip a little bit lower and retest this breakout level that happened back in 2017? Sure. So that means it can slip down towards it can slip down towards like 178, 180. So Anthem, to me, in my opinion, it's a screaming buy. You know what a screaming buy is, guys? What does the term screaming buy means? Guys, this is not a tough question. What is the meaning of screaming buy?
You really have to buy.
Okay, that's one answer. Aldi? Greg, what's the meaning of a screaming buy?
Is that everyone saying buy it?
Is anybody saying buy it? No. A screaming buy is you scream, then you buy, you scream again because it slips a little bit lower. You keep, this is, I'm just half kidding. Okay, just putting some humor in there. You scream again and you buy, and then you wait 3 days and the stock is up $30. Anthem, before the last 2 afternoon sell-off, was moving up nicely. This is a beast, and the beast is cheap.
Wow.
That's all I got to say. You don't hear me. I am this stock, Anthem Health. What's going on? Like, they are the ones, insurance companies, that are the forefronts of this coronavirus fight. So
Frank,
go ahead.
quick question. When you first said to buy this call, you said this was a hockey stick pattern. I never heard you say that before, so
it is
just want to know.
hockey. Okay, that was based on what time frame I can't remember. A hockey stick pattern simply means it looks like this. It's starting to turn. Okay, there. This is a hockey stick pattern. And the hockey stick was actually working out pretty good till 2 o'clock when Ronin Capital blew up on their portfolio. You guys have to understand this. It's like the biggest boy, not the biggest. They're not the biggest boys in town. So boom. Otherwise, Anthem was doing 215 and moving out towards 230. This is a 10, 15, 20 point mover. And we have made money on Anthem. People who have been with me know these powerful trades.
Yes. Yeah.
So my point is real simple. I don't know what the exact market bottom is. I'll talk about that tonight. I know pretty much what the exact market bottom is, but that doesn't mean it's going to happen exactly at my time and pace. But when these great companies get this cheap, these are the long-term buys you want to buy. What's going to happen? Humana, United Healthcare, Anthem, they're all going to go out of business like the Royal Caribbean? No, of course not. They are going to be the beneficiaries of the resurgence in putting huge amounts of money and investment in America's healthcare, because that's the only thing that we really have to rely on. And that's your fundamental approach.
Frank, SDGR.
SDGR is a long-term play. I keep on buying the calls months out. I don't even look at it. Unless it moves up $6, $7 and I take some profits, I believe that company is a monster. I've talked about this before. I don't want to talk about it again. Bill Gates, biggest investor in the stock. They are the most disruptive company in the world. It is not a day trading stock. I repeat, not a day trading stock. This is a stock I'd buy calls a year out, 6 months out, 3 months
Got
out,
it.
and just sit there. SDGR is, and I put my report is on there when Citron came out with that, but we were making money on it before that. We bought the IPO at 27 and the stock went to the moon, to 60. The thing was SDGR, it makes the automated artificial intelligence actual processes for all biotech companies so that as they're developing all these fantastic, amazing drugs and therapies, that they can expedite and speed up their automation processes, their development processes. That's what the company does. You never hear it on the news. I love it. And so when I look at the this is what we bought on IPO day 27, just for new members who are not with us. The stock basically went to 56 within 10 days. Came down, we bought it, started buying it heavy here. This is a very good looking chart. I'm looking at the stock at 44. Stock has been moving up in the face of this coronavirus crisis. This is not necessarily a market moving stock. This is a stock which, when they start producing earnings and stuff, in my opinion, this is a long-term investment. And it's and the charts are, it's very young. It only came out in February, so so it has to gain. But it's a
Yeah,
good looking.
I keep buying.
Yeah, I mean, listen, if everybody said, okay, if somebody said, listen, I'm going to buy 5 shares of this stock, 1 share of this stock every week, and you look back at this portfolio, my opinion, I'm not an advisor, I'm not your broker, I'm not your financial guy, I'm just giving you my suggestion. I believe in a year's time, 2 years' time, 3 years' time, this stock will be like a $400 stock, like Regeneron. Right? Regeneron was a $10 stock, $20 stock, and the stock went to almost 700 at one point. Okay, these are real American heroes. And they haven't even like really started to explain what they do. You can do your own homework on that. So guys, this has been fantastic. Gave me a lot of energy. Thank you for attending. Anyone who has time should attend the 8:30 p.m. session, the Sunday strategic webinar, so we get a look on what's happening with the futures market, which in my opinion will drop right away. But then what do I know? I'll explain where we can, where we have some sort of tradable bottom. These extremely volatile markets, be safe out there. Do not try to trade with large amounts. And if it's all up to you, whatever you guys want to do. But get used to intense volatility. And I wish everyone well. Stay safe. Thank you.
Thank you, Frank. You too.
Take it, Frank.
Thank you.